In today's video, I'm going to be having a look at China stocks. I'm also going to be looking at what the RBA has said, and of course, I'm going to have a quick look at SoftBank. Hello, and welcome to another ACY Securities Market Update. My name is Alistair Schultz, and I'm going to be your host through today's trading journey. The first thing I'm going to be looking at today is on the China stocks. They've had a rally which has really pushed towards nearly $500 billion worth of profit for shareholders. The stocks have rallied quite highly. The increase sits just behind the last best day they had in 2015, which coincidentally was just before a bubble burst. Now the CSI 300 is up 2.1%, and some analysts are actually expecting to see a period of consolidation after this rally up. Now that's not all that far-fetched to believe, considering when you ever look at a trend, you will always generally see a period of consolidation following for those of you that are technical analysts out there. Moving on from China stocks, we've gotten lucky with SoftBank. SoftBank has had a pretty bad year, especially with their vision fund. And now they've had their stocks and shares have reached a 2-decade high with a rise of 3.8%. Now, where they've gotten lucky has actually been with Lemonade Incorporated. Lemonade is an insurance company, and they do have the common denominator that you see in SoftBank with a quirky mission statement, a quirky name, and some interesting tactics for making their money. Now, luckily for them, once they IPO'd, they have actually doubled in value. So there has been a push from that to help with the stock valuations, but obviously there are other things at bay here as well. And we're seeing SoftBank finally start to recover a little bit after earlier losses in the year. From there, we're looking at what's going on with Fed Jerome Powell. Now, people have been asking and wondering where he might stop the accelerator pedal. Investors are asking what will make him actually increase rates, because at this point in time, it just looks like he's willing to throw money at the US economy as much as he can to keep it going. Now, the answer to that question actually is a little bit easier to answer than most would anticipate. The answer has to be inflation. Until he starts seeing inflationary measures start to climb up, or at the worst go down, and we end up with a different phase of inflation occurring, then we're likely to see him continuing to throw money at it. Now, this is something that might happen, and we're going to have to be aware of, is when the inflation rolls in, expect to see interest rates start to come up to try and curb that inflationary level. Now, that's going to be an interesting response, but it's going to take some time for us to see. We don't know how long that's really going to take, and we're not sure which way it's going to quite go just yet. Now, looking at the RBA has foreseeably decided to leave the 0.25% rate as unchanged, and it's likely to occur that way until at least 2022-2023. We've heard from a number of the big four banks and a few other investment funds around the globe that are expecting the same sort of thing. So I wouldn't at all be not anticipating the idea that we're going to see these long 0.25% interest rates for an extensive period to come. Now, the other part of this is that the RBA is certainly uncertain about the health situation that we're seeing in Victoria. And I pulled a quote directly out of their paper this afternoon that illustrates this. And they say, uncertainty about the health situation and the future strength of the economy is making many households and businesses cautious. And this is affecting consumption and investment plans. Now, if you're wondering what that really means at the end of the day, it is pretty straightforward, but just to give you a hand in case, it is looking at the idea that households and consumers are not really willing to spend money, and they're certainly not willing to part with it for things that might be considered to be unnecessary to them. So we are entering a period where we might be seeing less consumer spending than we usually would, and of course this has all been brought on by the pandemic and now a new set of outbreak that is occurring in Victoria. Moving on from the RBA, the news ahead of today. We have Japan's leading indicators report coming out. We also have Swiss foreign currency reserves being announced. So that'll be something to keep an eye on, especially when we're looking at the current account details. We have UK Halifax HPI, US economic optimism, and on top of all of that, US job openings occurring as well. So please keep an eye on some of those. None of them are really high impact. I would consider most of them to be moderate or low, but you never know what goes on unscheduled. So if there's anything from today's video that you'd like to get in contact with me about, or perhaps you've got some comments or a question that you might want to ask me, please feel free to shoot me an email at talk2al@acy.com. And of course, don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.